So welcome back to the channel. In this video series we're going to be discussing the different styles of trading. So we have day trading, momentum trading or intraday trading, swing trading and investing. So it's really important if you're going to trade the markets or invest in the markets that you know exactly what your trading style is. Oftentimes new traders come into the market and they don't actually know, they jump from day trading to investing, swing trading, momentum trading. So I thought to myself, why not just make this video? So what I've got here is I've got a couple of charts. So the first one is we're going to discuss day trading. So we're looking at LGCY, which today has made some moves, and we want to look at day trading. So let me find a better stock that we can analyze. So on a day trading note, what you could do is, usually day traders, they are looking at the 5-minute, 10-minute, 15-minute charts. So basically every single chart, every single candlestick pattern right now is a 5-minute chart. So day trader, they're entering the market and they're looking to capture this little move, which could be anywhere from, in 10 minutes, this is a 8% move. So they're looking to get into a stock that is going to give them a return on investment pretty quickly. Let's just look here if we can see. So for example, if a trader was to have got involved in this stock, they would have looked at in 10 minutes, if they saw the pattern on their chart, on a 5-minute chart, they could get into this position and potentially make 47.4% in a matter of 10 minutes. So if you bought 1,000 shares, you would have made yourself a few $100s. So the good thing with day trading is that there is the potential to make the profit. The problem is that you have to sit in front of your computer, and a lot of day traders don't make the money. So of course there's going to be day traders that do make money, and just like everything in life, you're going to get those people that are good at it. Personally, I don't like sitting in front of a chart, in front of a computer staring at charts all day. And again, the whole point of trading is it comes down to your own sort of preferences. Do you want to be sitting in front of a computer, or are you doing this on the side, or are you still getting involved with trading, from another perspective? So in terms of trading, you can buy or go long the stock. Going long is buying the stock. Shorting it is, if you saw this candlestick pattern here, you had another opportunity to borrow the shares from your actual stockbroker. They will deposit them in the account, you'll sell them. So if you sold them at 48 cents, and then you bought them back and sold them back to your broker. So basically you're borrowing the shares, you're selling them on the market, and then once it got to 38 cents and you thought, well, it's fallen enough, it's not going to fall anymore, you would then buy them back and hand them back to your broker, and basically you would profit the difference. They do charge you interest if you do want to short stocks. So that's pretty much it for day trading. With any form of trading, you need to have a set criteria and plan for your trades. You can't just say I'm going to be a day trader and enter the market and not know exactly what you're trying to do or trying to accomplish. So it is pretty important that you establish a written plan and that you know what you're going to do. So in the next part of our charts here, we're going to discuss momentum trading or intraday trading. Now, day trading can be considered intraday trading because you're trading within the day. Oftentimes, momentum trading is looking at the intraday chart, but you're looking at it on a daily or intraday basis to take a position that might last 1 to 4 days. So for example, on this chart, let's look at an hour chart. So this stock isn't the best to look at a momentum basis. Let's see if we can't find another one. So for example, in terms of momentum trading can be anywhere from 1 hour to about 4 days. 4 days, I would say, is actually a bit too long. Usually momentum trades last anywhere from 1 hour up to 3 days. So for example, if you saw that you like the stock and for whatever reason that the stock seemed pretty good to you over here and you wanted to enter your actual position, you would have got into the stock over here and you would have ridden all the way up here, and that would have been a 14% return on investment in about 2 days, roughly. So that's more or less momentum trading. I actually prefer momentum trading to day trading. You are in it for a little bit longer, and you can actually, in some ways, make better profit. So if we have a look at here at a momentum trade, so here the stock is crossing the moving averages, it's bouncing off of 50, and we thought, well, actually the stock has the potential to go higher. So if you entered the stock there and you rode it up, in 6-7 days you would have made 49% return on investment on your actual money. So there is a component where momentum trading does cross over with swing trading. And with swing trading, you're going to be holding your positions for anywhere from 2 days up until 2 weeks. Sometimes it can go a little bit longer, but generally anything over 3 weeks I would then consider as investing. So for example, if we look at a day chart, if you had saw the stock on a day chart and you entered the stock and it was closing at this point here, if you entered your position, put your stop loss halfway down this actual candle pattern, and you rode it up, you would have made 36%. This is over a 12-day period. So you would have been in this position for anywhere from 3 days to 12 days, basically. And that is the difference with swing trading. With swing trading, you're looking to capture these explosive moves, whether you trading options, which the stock is an optionable stock, or you're just looking to actually hold a position for 2 days. So swing trading is ideal for people who are working, who have got day jobs, people who can't sit in front of the computer all the time. You can combine and mix swing trading and momentum trading. So now we want to look at our next chart, which is investing. Now within investing, you've got your traditional investing, which is holding a position anywhere from a month or longer. But within the investing, there also is what's known as trend trading, or turtle trading, as some people call it, where you are looking to hold a position for anywhere from a month, 2 months, 3 months, 6 months, even up to a year. So with investing, you can use the one-day chart, but the problem is with the one-day chart, you're going to start getting whipsawed at the actual market. Generally speaking, I like to look at a weekly chart. So with investing, don't just think that you have to buy low to sell high. You can also be a short investor where you are shorting the market. So in terms of a shorting investor, if you saw that the stock was going down and you believed it would go down longer, you would have entered your position here and you would have held the position throughout this time that it sold off. So you could have captured this part of the market and you could have caught this part of the market. So just to give you an example, this move over 4.7 months is a 226% return on investment. So you're looking at these sort of returns on investments that are going to be lasting longer. So for example, once again, you saw a stock close above this position over here, and if you rode the stock up, you'd have made 216% in roughly, what's that, 1.1 months, and you held it for a month. So actually this actual move that happened here is actually longer than a traditional swing trade, but maybe a little bit too short for a long-term investor. Investors are usually looking to hold positions for a number of different months and even several months. So that might not be the best example. So we can see another short-term shorting opportunity. Might be a little bit too cheap, the stock. But let's look here. So for example, in April, if you got into the position or you got in over here and you rode the stock all the way up, you would have made 68% in 1 month. So a little bit too short there as well. We want to really look at about a 3-day chart. And once again, yeah, you can see here, as a long-term investor, if you had shorted the stock when it was showing the signals, and you shorted it already back in about February 2018, you would have made 167% if you had held on to the full position until it had crossed back up the 50-day moving average. So investing is long term. Trend trading is you're trying to capture this trend. So actually this is a pretty good stock that I want to show you here because there seems to be a pretty good trend in it. And you can see that from this point here in 2009, the stock was in a trend. Now, it's pretty rare that you are going to be holding on to a position for that long. So I will show you what would have been the ideal spot to get into this trade. So as you can see here, from about this point over here, once we had crossed these main moving averages, from about that point to that point is about a year, which is a 77% return on investment. That is ideally what most investors are looking at. They're looking to get into positions that match these sort of parameters. So with investing, you're looking for a number of different months. Now, it is possible that you can combine all of these all together. And the way that you do it is if you found a stock that you thought looked good. So for example, in this particular stock over here, let's say that you saw the stock and that you wanted to get involved because you believed that it was going to go higher. So for example, in this particular case, if you saw that the stock was going higher and you wanted to trade it and you wanted to use all of these strategies, how would you actually do that? Now this depends on how much capital you've got, what your goals are, and that sort of thing. So it is possible to combine all of these together, and this is what I'm going to tell you now. So on a long-term chart, this is a 3-day chart. You could use a weekly chart. So let's say on a weekly chart, you saw this candle pattern over here. So crossing the 50-day moving average, MACD, all your indicators are, showing that the stock looks like a pretty good buy. Okay, so now you want to know, I want to get involved in a stock. So you could buy 100 shares. Okay, so the 100 shares would have taken you up and made you, this is just an example, 100 shares you probably wouldn't do it because you'd only buy 4 shares or 5 shares, and at this price probably 8 shares you would have probably bought, just a rough calculation. So let's say you spent $1,000, whatever figure you want to use. So you put $1,000 into the market from a purely investment point of view. So you're only looking to hold this for several months, and this was from May. That's the 5th or the 11th, so that's about the 11th of May. So the 11th of May, you purchase a stock from an investment point of view. Now, if you wanted to day trade it, swing trade it, and combine the strategy, so you've entered your first position, and you know that your first part of this entire strategy is you're looking to make a long-term profit. Now, it's important to realize the saying is the trend is always your friend. If you're going to be trading this strategy and the stock is looking bullish, you don't just want to be shorting the stock every time that you see a little bit of a sale on a intraday basis, day trading basis, or momentum basis. So let's say if you wanted to swing trade the stock, going back there. So we are here in May. So you entered your position in May, and you now also swing trading it. So you could have been, you've got your main position which is on, and then you're looking to now enter a whole new position. And so from a swing trade basis, you could have sold short when you saw this major selling signal over here, and you could have actually gone into about the 15-minute chart in that period back in May, and you could have shorted it for 1 or 2 days from an intraday basis to then cover your position. So on an intraday basis on this candle here, you would have gone into the day chart. So you'd have looked at this chart on an hourly or 2-hour basis or 3-hour basis, 10, 15-minute basis. So from a day trading perspective, we've got now to manage trades within a trade. So once again, just to reiterate, you've got your main trade which you put on back in May. You aren't touching that. That is one order that you've put through to your brokerage firm. Now you want to swing trade this as well. So what you could do is you can now, for the swing trading component, you could go into the hourly charts and capture a small profit in and out during the day. The problem with this strategy of combining all of this is that unfortunately you're going to pay brokerage fees. So the main thing is with brokers is if you are doing this actual strategy of long-term investing, the problem that you might run into is your brokerage fees. So you have to be sort of aware of that, because you don't want to be, raking up your brokerage fees and actually not making a profit. So if you're going to be a long-term investor, choose to invest long-term. If you're going to be a swing trader, then stick to swing trading. The nice thing about investing for the long term is once you enter your position, you know that you're looking to trade over the long term. So if you're looking to short the market, you know that you're going to be in a position for a number of different months, and it's you don't need to spend more than 2-3 hours a week looking for the actual stocks to invest in them. And oftentimes with the newsletters that we send out and actual picks that we do, these are high quality stocks that we send out that are actually making the correct moves that we see from a swing trade and investing perspective. I'm not really interested in momentum trades. I prefer swing trading and the longer term trends in terms of trading stocks. So in terms of, as you can see here, this was a good stock to short when we had the signals here. If you see here that we had the MACD crossing over, I've got a number of indicators there as well. TSV and the stock cross the moving averages and continue to sell short. In terms of a return on investment, if you had shorted the stock all the way back there, there would have been a 173.4% move in, I believe it's just over 7 months, so not bad. I mean, most people don't even get a 12% return on investment from the mutual funds. So, and if you had used options to actually buy a put during this time, over 2-3 months, even if you had your put had expired over that period, that's still 54%. Now, in terms of an option, depending on whether it's in the money, at the money, out of the money, in terms of out of the money stock, for every 3.5 to 4% of the actual stock move, you're looking at a 66% return on investment from an out of the money put. So if you work it out, this would have been in the hundreds of percent in terms of the actual stock or option price based on the actual price of the stock. So it's really important to know the difference between whether you're a day trader. If you've got a job, day trading is not going to be for you. If you are a momentum trading intraday trader, also again, your job is going to be the main thing that's going to maybe cause you a bit of concern. I mean, from a momentum perspective, if you're looking at for example, a 4-hour chart, like for example, if you saw this huge move to the downside, yes, you could have shorted the stock. You'd have been in this position over 19 days if you're looking at the 4-hour chart. If you're looking at the hourly chart, maybe you entered the stock, the actual stock over there when you first entered the position or the trade, or if we want to look here on this side, as you can see, the stock is going up. So at the moment, as of today, the stock seems to have sort of found a bottom, and we can also see that the stock is at a previous support, which might be a really good time to buy this actual stock as of today, Evolent Health, because we know that in the past when the stock has come to this level, it's gone up in price. So it went from this price back in 2016 all the way to $28, and over here that's $8. So this might be a good stock to get involved in now. I'm not sure. We do see on a day position, I mean, it's crossed its main moving averages. We are crossing an 11 moving average right now. MACD is gradually moving up. Money stream is turning up. We do get a positive in terms of volume. Volume is looking pretty good. In terms of an hourly chart, this is where momentum gets involved. So if you saw this stock over here and you thought you wanted to go long, well, you would have been in the stock now for 2 hours, maybe a little bit too short. In terms of a 2-hour chart, if you had got in over here, you'd be waiting, and you'd have already made 2%. So it's not a huge amount, but you'd be looking at for momentum plays, if you've got the time. If you've got the time to look at a 4-hour chart, or at the end of the day, for example, you saw the stock being sold off. We know that when stocks get sold off so strongly, they usually recover a slight bit in terms of some buying comes into the market, but if it's been a strong move through strong moving averages, we can expect that the stock will actually get sold off. So knowing that if you were a momentum trader, you would be looking to enter the trade over here, again to the downside, knowing that if it's been sold off strong, there's usually a pullback, and then it's going to be sold off again. Pullback or bounce. So if you had entered it there, you would have made a 20% return on investment in 6 days. So I prefer to look at the daily chart. If you're busy working, you've got a full-time job, you want to be looking at the daily, 2 days, 3-day, weekly charts to really get involved with it. You could also look at monthly charts. Monthly charts, of course, every single candlestick pattern that you're going to see is going to be a monthly chart. So that's a downside to looking at monthly charts. But again, it depends on your risk tolerance. Everything here boils down to your risk tolerance. How much are you looking to risk, and what is your actual profile? So if you're busy, I would suggest, you got a job, you got a family, swing trading and investing, it shouldn't take you more than 1 to 2 hours per week. You can do this on the weekend as well. Look at stocks for swing trading and investing. Again, swing trading can be anywhere from 1 day up to 2 weeks, 3 weeks. Investing can be anywhere from a month to several months. And just to show you, if we look at a few more charts, maybe we can actually see some examples where you could have gone long or short. So for example, here we go. Here's a good chart that you would have looked at in terms of trading. If you saw this chart in April, you thought it was a good buy, you could have entered the stock chart and you would have made 3.1% in 2 months. So that is a good example sort of a momentum, of a investing or a trend trading strategy. So this would have been a pretty good trend trading. The thing with trend trading and investing, there's a lot of similarities. Oftentimes with trend trading, you're looking to capture a large portion of the main trend. So maybe a traditional trend trader would have actually said, you know what, we would have got involved in the stock back over here. That would have already been in 2017, I believe, or 2016. So, if you had got in over here at $8, today the stock is at $28. It would have been 2.9 years, but still you'd have made 233%. So you can combine the investing side and swing trading. So if you saw this actual stock and you liked it, for example, this would be a really good example to use. So let's say you saw the signals over here and you wanted to actually enter the trade for a long-term trade. So you could have bought and kept on adding to your position all the time. And then when it came to swing trading, if you saw that this portion of the trade looked good to buy a swing trade position, you could have bought heavily over here, closed out of that while still holding on to your main position of the actual stock. So that is one way to do it. And those are the main styles. So if you're busy, if you've got a job, stick to swing trading and investing. These are the main, and a lot of, the problem with day trading is that the amount of brokerage fees that eat into your profits. Whereas with swing trading, yes, you might be opening and closing positions a few times, once or twice a week. With investing, you might be closing out positions every 2-3 weeks. So if you take the average broker commission of $15 round trip, it's only going to be $15 to enter the trade. Swing trading, you might spend double or triple that over the month. But in terms of day trading, you could be opening and closing positions spending $15 per day. So if you're busy, it's going to be very difficult to manage and monitor these sort of trades. And you could actually find that you lose money. A lot of people, they want to quit their jobs and do day trading and swing trading. And I can tell you, as someone who has working from home, being solitary is not the easiest thing. It's a dream that most people have. There's a reason that most people die once they retire within 3 years. That is because the solitude is extremely, extremely difficult to deal with. And I would not suggest it to the average person who likes to be social. If you're looking to participate in the market, I would suggest swing trading and investing. The two styles complement each other. You're using the same buy and sell signals. You're not too close to the market. Hourly fluctuations are going to still keep you in a trade. So yes, swing trading and investing are for people who still want to participate in the market, but want to still have a job on the side and keep that going. I know a swing trader who makes $6 million a year trading from Thailand, and there's another trader which I know which made just in under 2 years $2 million. All they did was swing trade. They did use options. They do both trade options, but they use these two styles of trading: swing trading and investing. Most of the best traders in the world use a combination of swing trading and investing. Day trading, it's very, I won't say that it's very difficult, because the same rules apply, because the stock market is fractal. In terms of what works on an hourly chart is still going to work on a 5-minute, and a daily, a weekly, a monthly. The same principles apply. The problem is, with day trading, like I say, you're going to be at home by yourself, you've got to sit in front of a computer, you're going to monitor the trades, and it's just, for me, it's a personal preference. There are people out there that prefer day trading, and again, it goes hand in hand with your personality. What is your own personality? What are your preferences? What are your strong points? You know, some day traders say that it's crazy to leave your money in the market for over a day or two, whereas a swing trader and investor, a swing trader will say, well, I'm not going to manage my trades on an hourly basis or on a 5-minute or 15-minute basis. And an investor might say, I'm not even going to manage my trade. Once it's on, I'm not going to touch it for weeks on end unless I see that something is fundamentally wrong. So that's it basically for the different styles of trading. I hope you enjoyed it. A little bit of a long video. I hope you got something out of it. If you want to find out more, if you want to get free penny stock picks and stock picks, which include options, sign up to the site below and you can find out more information.